Hey guys, RC Peck here from Fearless Wealth Research. I hope you're doing well. What you are seeing on the screen is two price charts. The top price chart is the Dow Jones Transportation Average, and you're looking at it from basically the beginning of 1999 to the very last day in January in 2019. So we've got 20 years, I believe. Let me just quickly look down here. Yeah, we have 20 years and 3 months. So on the top, you have the transportation average, and on the bottom, you have the S&P 500 with dividends reinvested being represented by SPY. So there's this conversation and this belief that transports, and it's really a relative relationship between transports and the industrials. But in the article that I referenced this week, it talked about transports and waiting for them to break out, and if they're breaking down, and the direction of transports tell you the direction and the health of the U.S. stock market / U.S. economy. So I just want to compare that. Is that true? And I want to compare the transports price chart with the S&P with dividends reinvested. So the first thing I want to point out is between these two blue vertical lines, and if you see on the upper price chart, you can see that transports have been falling since, call it, the second quarter of 1999 to the first quarter of 2003. So in this case, transports started falling before the S&P did. But if you look and you say, okay, well, transports they fell 49%. And if you compare that to the S&P, which fell 48%. So we can see that transports fell actually a little bit more than the S&P. So we definitely know that at least in the .com correction / crash, transports were not a place of safety. And they did start falling. Let's look. Ultimately, the S&P did a triple top. You could say the S&P topped out in March, and the transports topped out in May of 1999. So you could say, maybe 10 months before that, transports ran a signal saying, start to get out of the market. Okay, but the problem is in 2008, transports didn't start falling, right? And really significantly, because I'm up on the top portion here, they had to kind of break this gray horizontal line here. And by the time they broke that gray horizontal line, Lehman Brothers had already collapsed. And if you go down here to the S&P, you can see that the S&P had already fallen about 35%. So in the 2008 global financial crisis, transports did not give an early signal. And one could argue that maybe they did give an early signal in the .com crash. So you have 150% crash where they gave potentially an early signal, and then you have the 2008 where they didn't. So as far as two of the 50% plus corrections in the last 20 years, transports did not lead at all. And then you have 2011 when the S&P almost fell 20%. And you can see up here, looking at the top price chart, that transports broke down right alongside with the market. So it didn't lead, it didn't follow, it fell right along with the market and nothing more. So in that case, it was neutral. It didn't lead and it didn't lag. It did exactly the same thing. One thing that's interesting about transports over the last 2 decades is if you look and see the two blue horizontal lines, transports could not break above that price. Call the top price 5,500 on the transport average. And then once it did right here, and then we go down here and say, well, what happened to the S&P? The S&P also didn't really start going higher until the exact same time frame. So again, transports didn't lead, didn't suggest, didn't foreshadow. It moved right along with the market itself. And then you have this correction here where transports fell. Let's see how much they fell. They fell 28%. Now their topping pattern started and it went right to here. So in that case, transports led they started breaking down before the market broke down. But again, it wasn't a huge breakdown. It wasn't like this amazing signal. And they eventually broke down 29%, while the market itself only fell about 14%. So again, we definitely know that transports are more volatile. I forgot to see what they broke down in 2008. Yeah, 2008, they broke down about 62%. The S&P broke down 58%. So again, what we do know is the transports are more volatile than the market itself. And then we can see that the transports didn't break to new highs until really just recently over here at the end of 2017. And if you compare what the market did during that exact same time period to the end of 2017, the market was up about 23%. So in that case, it lagged. So when we look at the last 2 decades, we had one time where transports led or could have indicated something happening with the market. That was 2000. Then in 2008, it lagged significantly. Then in the 2011, 20%, almost 20% correction, it went right along with it. And then in 2015 and on, it lagged. So I'm not seeing a lot of lead indicator or let's look at the transports for some sort of indication of health. And again, I talk about it in the article how this is 2019, this is the 21st century, this is the century, whether we like it or not, of Amazon and Facebook and Microsoft and Google and Apple and Netflix. None of those have a lot of transportation-ness to it. In fact, they do just the opposite. What almost all of those companies do, if not all of them, they allow you to connect with people without getting on a train or a plane or an automobile, right? So transportation's not gonna go away, right? It used to be your feet, then it was a horse, then it was a horse and buggy, then it was an auto. Trains came before autos. Actually, I don't know how long after autos came planes, but we have transportation and that won't go away. And transportation itself is going through a transformation where people having to be behind the wheel is going to be replaced by computers behind the wheel in the next decade. So the thing I want you to take away most from this review of transports is not to further rip on the Wall Street Journal, because I already did that in the actual blog this week, but to say to yourself, you know, what are the price charts trying to tell me? What are the price charts wanting to tell me, right? What is a comparison trying to tell me? What is your money trying to tell you about your own net worth, your own stability, your own certainty, right? Your money is trying to tell you something. Price charts are trying to tell you something. And it's my humble opinion that you should probably listen because they know more. Your money knows more. Your money is trying to tell you what to do about your investments. Price charts are trying to tell you what to do about your investments. Thanks everybody for being in my world. Again, this is RC Peck, and this is just another step in helping you find your certainty and your stability and helping you learn to listen to what your money is trying to tell you. Until next time, take care.